Hi, my name is Josh Mahony, Chief Market Analyst at Scope Markets. This week sees markets turning their attention back to the economics following a week that saw Nvidia absolutely smash past estimates and continue the gravy train that's seen US markets reaching record highs once again. Interestingly, the past month has seen a big realignment in terms of market expectations away from that March rate cut and 7 rate cuts this year, and more towards a June rate cut and the potential for maybe 4 rate cuts this year. Jay Powell pointing towards the potential for 2 or 3. And certainly, given the fact that last week we saw the FOMC minutes coming out and essentially saying that they're cautious and they want to see greater evidence of disinflation, the focus really turns back to the US inflation picture. I've said a number of times in the past that I don't necessarily think that we're going to see US CPI or core CPI back towards that 2% target anyway soon. And so really the focus turns to that core PCE metric, the favored metric from the Federal Reserve, as the number one route to target. That comes up on Thursday, the 29th of February, in a leap year. Could it be a lucky one? Well, who knows? But certainly, I think this is going to be one of the big movers for markets this week. Let's look at what markets are expecting in terms of that core PCE number, which we focus more so on than the straight up PCE price index number. Core reading expected to move up to 0.3%. That would keep that headline number at 2.9%. Wouldn't necessarily be the most encouraging thing if we were to see that figure remain steady, because of course we want to see disinflation. That's what's going to give us greater confidence that we're going to see a swift move back down towards that 2% target and the Federal Reserve start to cut rates. That is not what markets are expecting. They're expecting to see a 0.3 figure and a 2.9 number. Let's look in terms of, this is, some of you might recognize this slide. This is my core PCE versus core CPI slide, and show you exactly how things lay up. Now, first and foremost, it's worth noting at the top end that PCE is already well below the core CPI number. Also, it's worth noting on the second section of it that if you look at the orange bars in the sort of middle of that, in the middle of 2023, we did see much greater disinflation and lower monthly levels of core PCE inflation compared to that core CPI. So this is in a much better position to get back down towards target compared to the CPI or the core CPI. And that's highlighted by the third section on the bottom, where we've got the 7-month annualized figure, which means if you take the last 7 months worth of inflation and you project that forward, where would that take us? Well, that would take us back down below 2%. So this metric has, for the last 7 months, been tracking at a sub 2% level. In terms of what the Federal Reserve wants to see, well, they want to see proof that they are going to get back down to 2%. And so further core PC monthly metrics along the lines of what we've been seeing over the past 7 months would embolden them to think that, well, once we see that May figure stripped out, and you can see that May number is the end of this run of sort of 4 significant monthly readings that we're yet to see stripped out from last year. Once we see those taken out, that's when we're likely to hit 2% in terms of the core PCE. But it does come down to exactly how inflation shapes up over these coming months. Markets are expecting a 0.3 reading. And the fact is that if you look at the last February core PCE number at 0.359, so not necessarily too far away from that 0.3 number. That's why we're seeing markets expecting it to remain at 2.9%. I think there's a good chance that we do see it move lower, but maybe not to the degree that you would expect to see a significant move. So even if we're at 2.93, we could end up moving to 2.87, something like that. It still remains at 2.9 on that sort of headline figure that everyone's looking at, but you're starting to see gradual disinflation. Because if you look at the past 7 months, we haven't seen a metric beyond that 1 September reading that is anywhere near that 0.36 number that we saw last February. So there's a good chance that we do sort of gradually move lower, but we have got a number of previous occasions to look back at and say, well, look, in terms of the trajectory of inflation in the US, from a core PCE standing, things do still look relatively decent for that rate cut in June and a potential return to target around that time. So the key thing for someone looking out for this report is, do we come in below that 0.3 on a monthly basis? If so, then that would really continue that theme to take us back down towards that 2% target before the mid part of this year. So that's the key thing to be looking out for. And ultimately, the fact that markets are expecting to see a somewhat underwhelming, 0.3 figure and to remain at 2.9, in a way that could set us up for some significant volatility if we were to come in under, if we were to see a 0.2 or 0.1 on that monthly figure and greater disinflation on the year-on-year number, then that could give us greater confidence and a market sentiment might improve as a result. In terms of the market, what we're looking at, of course, is the S&P 500, is a market that has been very consistent of late. 2024 has been a gift to bulls. And if you look at how we set up at the back end of last week, where we saw, of course, that massive Nvidia boom at the back end of last week, Friday sort of a bit of hesitancy coming into the weekend. Well, how are things trading now? This looks a little bit like how we traded back here on the 12th of February, looks a little bit like how Friday finished the week. Could that mark the beginning of a pullback? Well, look, I wouldn't necessarily be surprised to see soon enough a pullback towards trendline support. And arguably, it could come around this inflation gauge on Thursday, because you've got potential question marks about whether we could see that inflation number get back down to target if we start seeing core PCE essentially flatlining or move towards the upside. So flat core PCE, higher core PCE, that could cause a near-term pullback for this market. Of course, we still do have some earnings coming out this week, the likes of Salesforce, Workday, Dell, a handful of names. But certainly, the trend here is very well established. It is moving towards the upside. And if you're looking at the economic data point to be watching out for this week, it is that core PCE metric. Markets are expecting a somewhat underwhelming 2.9 figure. If we see that, we could see a pullback, but the uptrend remains in play. And if you're looking at core PCE, despite the expectations of it looking like it could remain flat for this month, the trajectory as things stand over the past 7 months do continue to point towards a move back down to 2%. The same can't be said for CPI and core CPI. They look more likely to be able to reach target in Q4 of the year. So that is a cause for concern. But the number we're going to be seeing this week isn't necessarily the one that is really, I don't think, going to be the big shocker. But certainly if we were to see a higher number, then that could derail the idea that the core PCE number is going to be really giving markets exactly what they need, which is that which is that dovish sentiment from the Federal Reserve. In terms of the dollar index, bear in mind that equity markets, as I mentioned earlier, have been largely doing their own thing off the back of what's happening in earnings. So it's quite difficult to say, okay, we're going to see a pullback here, because basically this market just keeps going higher. But you can say, look, we're channeling upwards. We've seen a bit of an indecision on candle on Friday. We could see that core PCE number come in flat as expected, and then people start concerning themselves. But you would say, in terms of things on the dollar index side of things, let's go on to the daily time frame. You can see that we're rolling over as things stand. And so the question mark here is, do we see markets emboldened by this core PCE number and think, great, we're suddenly going to see a return to 2%? That's not necessarily what markets are expecting. If that did happen, if we saw a low core PCE number, it would likely drive down this dollar index. But that's not what markets are expecting. I think there's a good chance that we do see a sort of relatively flat number this time around. And so from that perspective, you can see there's a possibility that what we're seeing at the moment is a retracement. Let's just put on some of these fibs. So it's coming in towards that 76.4 fib previously. We're coming back down towards that level. Look, as equity markets move towards the upside, that should be a driver of downside for the dollar index. So from a wider perspective, I think that this market will roll over. But whether that's going to happen right away or not remains to be seen. We're sort of tracking lower at the moment. But like I said, we've got this uptrend in play over recent months. The pullback in towards a 76.4 fib caught a bid on Thursday. If we see this core PCE number flatline or higher, I would expect to see this dollar index finding the bid once again. But like I said, from a wider perspective, I see this market likely rolling over once we see markets fully aligned in terms of those rate expectations and comfortable with that, because ultimately we are moving into a year where I'm expecting to see rate cuts, and those rate cuts coming to the benefit of the economic data. So I do think it's a beneficial year in terms of risk assets. That comes to the detriment of the US dollar. But for the time being, if we do see that core PCE number coming flat as expected or higher, that could raise some concerns that it might take a little bit longer for the US to move back down to target on the inflation front.